everybody. Leticia here. Hope you're all doing amazing on this beautiful sunny Thursday afternoon. As promised a couple of days ago before our amazing time in Ottawa, today we are moving forward with session 4 of my recently announced Money Matters webinar. And today's session, the topic is buying your first property. And with me today, I have my amazing friend and business contact, business connection, Sarah Makhomet. And I will introduce you to her shortly. And the reason we're talking about this today, guys, is because buying your first property is one of the main steps that somebody can take towards building net worth. And as mentioned, when I first started this webinar series, my intention is to empower people when it comes to their finances. I feel like, you know, the financial aspect of life can be one of the ways in which we can most empower ourselves to feel strong and confident in the coming months and years. And once again, buying your first property, we know that a large percentage of Canadians' net worth is concentrated in their home equity. So for most Canadians, taking that first step is one of the crucial ways in which they can move forward financially. And I know many of you, my amazing friends, are already not only homeowners, but also investors. However, for those of you who are still looking to take this first important step, financial step, you are in the right place. And hopefully you will learn a few things to help you feel more confident about this decision. So, and one thing I wanted to say is, you know, a lot of times when people start thinking about buying their first property, the first thing they start to do is look at real estate listings, start thinking about what kind of property they may want to live in or buy. And in my experience, that's the wrong place to start. I mean, you can look at it all you want. However, you want to have some idea as to what you're actually able to qualify for. In other words, yeah, you could be looking at $2 million homes all you want. It's very nice. But in terms of actually taking that important first step and moving forward with a decision, you want to know, you know, what you're able to actually, what's your purchasing power, what you're actually able to buy. And then the other mistake people make, in my experience, is they'll walk into their bank branch where they'll speak to a teller or a financial consultant at the bank and provide them with all their information. And then the bank may come back with a decision that may or may not be in your favor. And once you get that answer from them, and if you're not happy, now you have to go down to another bank and see if they're going to do better for you. And every time that happens and your credit score gets pulled, there is an impact on your credit score, which again, it's not in your advantage to have your credit score pulled multiple times by multiple different institutions, which is why ideally you want to be dealing with a competent mortgage broker who has access to multiple options to begin with. And they will know, based on your buyer profile, they'll know which direction to take you in. So with that said, again, with us today, I have my amazing friend, Sarah, who not only is she just a wonderful human being, but she happens to be an amazingly competent mortgage professional. In addition to being competent as a professional herself, she actually is the owner of one of the largest Dominion lending centers in Canada. So I'm absolutely honored that she could join us today. So I'll read to you Sarah's bio, if I may take a few minutes. So I know, Sarah, you're being very quiet, but I'll be done talking in a second. So Sarah's career in the financial sector started on Bay Street. She credits her success to hard work and dedication to her clients. Prior to her current mortgage brokerage merger, Sarah had more than 50 agents in her own brokerage and consistently appears on the Canadian Mortgage Professional Top 75 Brokers list. Thanks to her strong book of business, Sarah has been featured in the Women of Influence editions of the CMP magazine for the last few years and enjoys sharing her knowledge through speaking engagements in the Toronto area. And now we could say beyond the Toronto area, Sarah. So with close to 100 agents, Dominion Lending Centers is one of the top 10 brokerages in Canada. With strong relationships with lenders and banks, Sarah helps her clients achieve financial success through real estate with first, second, commercial and private mortgages, business loans, and debt consolidation. So there are other areas that Sarah can assist us with. Today's webinar is more of an introductory webinar. Hopefully we can have Sarah back on a future session to talk about more advanced strategies. And a world traveler, Sarah enjoys meeting new clients and new cultures and sharing her knowledge and expertise in the financial sector. So thank you again, Sarah, for joining us today. Any first words to start?
First of all, I would say thank you for having me. It is such an honor and such a pleasure to be here. And I am looking forward to sharing some of my knowledge. As I said, it's a very sort of basic start to owning your first residence, which is a massive, massive step for most Canadians. And as you said, most of Canadians have their wealth in homes. So this is certainly is a very important step to everybody's financial well-being. I'll be sharing some of the basic obviously strategies, but we do a lot more advanced. We do work with a lot of new to Canada first-time, not only first-time buyers new to Canada, as well as a lot of clients of ours own multiple properties. So we are specialists in helping our clients diversify and go into the investment properties as well. So again, thank you for having me today.
My pleasure. So with that said, I will bring up, I know you have a few slides prepared for us, so I will bring that presentation up so we can share it with our audience. And
thank you.
And I know, my pleasure. I'm not sure if I'll be able to pass the remote control, but I'll flip through the slides for you. And let me just go into presentation mode. Okay, so shall we begin? Okay.
Yeah, so first of all, I would say that I would go into more or less the step-by-step process of buying your first property. And as you mentioned before, that most of the people start with buying their first property with real estate agents. So that seems to be the most common thing, where they'll call a real estate agent and say, I'm looking to buy a home. And I would say that is definitely would be a secondary step in the process. The first one, I would say, you want to qualify to understand what is your purchasing power. So how much you have to put as a down payment, where your income is at, where is your credit at, and also what do you now qualify for. I know majority of people think the bank is their number one option, which it is, but in many cases, the mortgage brokers are, I would say, number one option. And the number one reason is that we do help you look into your credit score and see what it's like. And also we can use the same credit score to shop with multiple lenders. So if you wanted to go from Scotia to D, they'll have to pull your credit every single time with us.
You don't want to do that.
You don't want to do that. Absolutely. You wanted to go to somebody like myself or another mortgage broker, and they can shop for you and get you the best rates as well as the best terms. Rates are not everything. I've seen, different versions of locked in mortgages and all kinds of stuff, being in the mortgage for so many years. But understanding what your options are. Options is always key for everybody. So that's one thing. The second thing is that it doesn't cost you anything to use a mortgage broker. We do get paid by the bank, so TD Scotias of this world and many other, we have 40 lenders compensate us directly. So there is no cost to a client usually to use our services, unless it's some sort of an alternative like a private mortgage or something of that sort. There is no cost. So we shop for you, do the work for you, and get you the best terms and conditions. The second thing I would say is after you learned, what are your how much you can afford for, is building your team. So you need to, I mentioned a real estate agent, and you need an appraiser, you need a lawyer. So all of that stuff, it also can help you assist if you are first time and don't have it. And like yourself, with recommend insurance, that's very, very important for most families who are looking to, continue with their journeys and have children. Insurance is key. And I recommend getting it earlier before you even start having children, because it's a lot cheaper when you're young. So I always give that as a big advice, and I tell everybody, it's very inexpensive, and then you set for life, and then you can, increase it if need be once your family gets bigger or whatnot. So
thanks, Sarah. Thanks for that. I mean, there are no slides about that, and I was thinking of mentioning that, yes, part of the home buying process, if you're taking on a mortgage of a few $100,000, that's one of the areas where people first start thinking, maybe I should have that insured, so that if God forbid something happens to me or my partner, my loved ones are not going to be left unprotected and now solely responsible for this multi-$100,000 obligation. It is one of the considerations that can come up, and ideally it should be discussed and addressed. And of course, I myself am licensed as an insurance broker. I can help people in that area. Okay, I'm not a mortgage broker though, so that's why we're having you on the call. to help people understand kind of what the process entails. Now, do you want me to keep moving to the next slide? Sarah, did you want to say anything about this particular slide?
No, that's the next slide, please. Thank you so much.
Okay. And by the way, everyone watching on Facebook, while the slides are playing, I'm not able to see if there were any questions asked. However, if any of you have questions, please do ask them in the comments. And once we're done with the presentation, Sarah and I will answer any questions. Okay, thanks. Okay.
So I would just say that, and I'll try to go over the presentation briefly, just sort of give, a synopsis of everything, arranging your mortgage. So what do we look for is interest rate. Everybody always calls, and the first thing that people ask, what is your lowest interest rate? And everybody wants the best rates, but I also want our clients to understand the terms that come with the best interest rates. So that's important. Amortization, how long would it take you to pay off your mortgage? How many years? Is it 25? Is it 20? Is it a shorter period? Mortgage types, is it a closed, variable? Is it a fixed mortgage? Is it a variable mortgage? Is it an open variable? So all of those things are important. Then also interest rate trends. People always ask me, should I go into a variable or a fixed rate? We look into mortgage rate trends and forecasts. And also big time, it's understanding your personal needs. Everybody's different. Everybody's risk tolerance is also very different. And so we have a conversation and it's tailored for individual person. And then, as I said, so all pre-approvals are good for 120 days, and the clients are ability to shop for them, and then they have a peace of mind. So they know they qualify, they can now obtain a mortgage, and they can go into the bidding wars and everything that is starting again in this market. So we seem to be getting busier than we were, during March, April, and May. The next step obviously would be working with the real estate agent and making an offer. And then the second, and I always recommend getting a real estate agent, specializing in your area and can work with you on that. And that's not my specialty.
We are probably going to have, sorry for interrupting, Sarah. You're actually very good to suggest maybe that I should have a market update because, there has been, we've been going through some unusual times, obviously in the in the past 3 months, and perhaps to some extent an unusual real estate market. So I do plan on having some amazingly competent real estate agents that are specialists in their areas. And I'm thinking, the GTA, Toronto area, Hamilton, Kitchener, maybe Cambridge. I'll see who I can get on the call for next week. But that's my thinking. Next week, we're going to have some realtors talk to us about what's been going on in the markets. I'm sure you could speak to that as well. But especially since I want to maybe address a few different areas and property types, we'll have some of my wonderful agent friends come and talk to us.
Well, that'd be lovely. Very important to understand in every area.
Yeah, so I was going to ask you, Sarah, obviously the fixed rate versus variable rate, that's a very popular question that people have. And again, we are going through some unusual times right now. I don't know if you have any insider knowledge as to where interest rates are headed, and so what do you see people doing right now in terms of
I definitely see that. Speaking of the trends and everything else, obviously with COVID and what has been happening in the market has, March and April, May has been incredibly slow. And so we've seen cuts and, fairly low interest rates coming. And I think, the rates, I've been saying this since 2008, truly, the rates have never been lower, and they just staying low. They seems to be staying low because we've gone through 2008 and we've gone through a lot of changes. And I am foreseeing the interest rates will remain low. I don't foresee that, that we will, the economy has to be stimulated. People are out of jobs. So I personally do believe that rates will remain low for an unforeseeable future. And it is a great time to be buying a home because you don't see the same bidding wars as we have seen before. So, if you're looking to own a property, and that it's a house and you can get what you're looking for. In Toronto, it's been very challenging before this. In February, we had so many ways to be a house would have 20 offers on it. So it has been incredibly challenging for a lot of our buyers to buy a home because you always have to compete with other offers and you seem to be always, buying for more than you wanted to afford. So I think overall, this is such an incredible time to be able to actually buy what you want, take your time, find what you want, and be able to do that. So I think real estate is always great. And if you,
for lack of a better term, sorry, Sarah, but what comes to mind? You want to buy when there's blood in the streets. I know that sounds really bad. That sounds bad. That sounds horrible. We're not in those times yet, thank God. Okay, but I don't know why that came to mind. But ideally, you know, most money is actually made in recessions, because if you
Yeah.
are courageous enough to buy, and I
Yes.
know we are, I don't want to use that language, but I mean, we all know what's been happening to the economy. So if you are somebody that is in a position to buy, first of all, you still have your work, you still, you're in a position to qualify for a mortgage and actually buy a property, chances are, we're not going to see, I mean, again, we're not Nostradamus, we may not know, but I mean, in terms of how the market has been up until now versus now, this is a good buying opportunity. Other people are uncertain, scared, what have you. Well, okay, well, let me buy that property at a discount now. Whereas in the past, I mean, I have even been able to buy because of the amount of multiple offers we were seeing.
Yeah. I would definitely agree with that. I do think that it's a great time to look into the market and get yourself comfortable with the market. And I truly find that last time I've seen this was in 2008, when obviously the stock market collapsed. And that was the last time I've seen something like that. So that's 12 years ago. So obviously this type of opportunities don't come every day. And as you said, it's great opportunities. I mean, I think that when things happen and you were preparing yourself to buy, I mean, you're in much better shape, to buy something right now than when it used to be 2008, 2000 in February of this year, when it was so busy.
And it's crazy to know that even February would not be
It was
a
incredibly
time
good.
of, essentially the boom market, or what do you call it, the spring market was starting early. It's literally February and it was heating up already. And then this whole COVID thing started, which just scared a lot of people, but and had that impact on the market. And again, no, that's really interesting to know. And again, we're not going to get too much into what's going on in the market, but so just to kind of finish the interest rate question. Sorry, we kind of went on a tangent. My fault.
Okay.
Would you? So right now, you're foreseeing that you don't see rates jacking
No,
up,
I don't see the rates going up. I don't see
because that
based
would
on
kill the economy. Sorry.
yeah, I mean, no, that's absolutely, yeah, you're absolutely correct, Leticia. That's absolutely correct. I do think that the rates will remain low. I mean, my personal, and I only sort of saying what I'm seeing in the market right now, that they are going to remain low. It's a great time to stimulate the economy for people to go out there and buy. I mean, some people have been refinancing a lot of it, taking equity out of their homes, buying multiple properties. I mean, there have been so many different ways of looking, of generating wealth. And I think that real estate is probably one of the best ways of doing that.
For
And I
sure.
don't know,
For sure.
I'm an immigrant myself, so obviously I value real estate, and I think it's a tangible asset. So we shall see.
Yeah. No. So in other words, when it comes to fixed versus variable, would you say it's just up to each person's comfort level?
For sure. Yeah, it's very individual. I always recommend, because people always call me and say, what are your best rates? And I always say, what is your credit like? What is your income like? And what is your personal, tolerance with risk, right? So some people will say, I would love to lock it in for 5 years and never worry about it. And some people say, I don't mind, because I don't mind the fluctuations and I can afford it with my income. And somebody says, well, it's a one income family and the husband is the earner and the wife stays at home, and, we are fairly tight. We cannot afford it. So we really need to be comfortable. We need to lock it in and make sure we have a peace of mind for the next 5 years. A lot of entrepreneurs, believe it or not, go into fixed rate mortgages because they have so much instability in their lives already with business, that they want to have certain stabilities and that's certain variables, and like ensure that that's and fixed rate mortgages. So it depends truly on
Yeah.
your personal risk tolerance, and depending what else is happening in your life and the stage of your life as well. So there are truly a number of variables that we can look into.
Got it. And obviously, you're in a position to work with people and advise them in that
Yeah,
regard.
definitely,
Yeah.
definitely work with people and advise them, and it's very much on an individual basis. Everything absolutely is always individual basis.
Got it. Should I keep going with the
Yeah,
slides, Sarah?
do this.
Yeah.
Yes,
Okay.
that's fantastic. Thank you so
Okay.
much. Yeah.
Yeah. My pleasure. Okay.
It's just more or less we're speaking of location when it comes to real estate, and real estate agent would be the first one to tell you that. And we look at the neighborhood where you're looking to live, and usually when you have children, it's schools. That's what it comes down to. What schools my children will go to. And proximity to schools, amenities, city, and transportation. I mean, Corona has changed so much. I'm seeing more and more
Of
people
course.
who are okay to live outside of Toronto. They say, or maybe further on the suburbs or the outskirts. They don't have to commute downtown as much. They can work from
Yeah.
home. They want offices at home. But you always want to be in the desired neighborhood. So for highest, resale value, that's where, and you always make money on the purchase. That's where everybody makes money. It's not when you're selling, but when you're buying. So those are incredible things to know. And that's why having a great team a lawyer, a real estate agent, a mortgage broker, an insurance person, home and auto and life and all of that stuff. Those are the key. That's your team that you can keep forever, no different than your accountant. So,
and again, if you don't have these professionals in your network as of yet, please don't worry. Again, you can reach out to someone like myself and or Sarah. We have been in this world for a while, so we do have amazing contacts that we can refer you to help you with this important decision. And of course, you can always access other options. But in terms of if you're not sure where to go, Sarah and I are both fortunate to know people that can help you with all the steps of the transaction. So you're in good hands.
You're in good hands. Yeah, well, correct. Thank you so much. Yes.
Oh, my pleasure. Yeah.
So determining your price, needs versus wants, and that's a big one. I wanted to actually stress because especially with the bidding wars in February, we had so many clients who were all inquiring about, I want to buy as much as I can, but unfortunately, when you go into the bidding wars, it becomes even higher. So you have to buy, $100,000, $200,000 over asking price, and where
Insane.
it was that.
Yeah,
so it truly has become challenging today. I mean, I find that it becomes more about your wants, and clients are maybe okay to be more in the suburbs, not in the core of the city or whatnot, because they can work from home a lot more. They might want a little bit more space, so they have an office at home, and maybe there are two people who work in, so now they have maybe 2 or 3 kids, 2 offices at home or whatnot. So it really has changed the needs of people and the affordability as well. What do you qualify for, right? I mean, that's key to be aware of and keep that in mind. And I always say that it's good to know what your limit is. So that's also very, very important, I believe. So
yeah, unfortunately, I mean, I know we all watch, I mean, maybe not all of us, but some people watch those real estate shows on TV, and they'll tell you, oh yeah, we're pre-approved. This is our top budget, 400,000, right? For example.
Yeah.
And then they look at properties that are outside their budget, and then they show you, well, we're gonna stretch to 460. We would talk to our lender and we'll be able to make it work. Well, how realistic is that, Sarah? When you get pre-approved, let's say for 400 or 450 or 500, whatever that pre-approval limit is, what are the chances of you coming back and saying, well, I found this property, but it's 560? How much leeway is there?
It's a great question. I was one of those on one of the shows here for a number of years, and
nice. I didn't know that.
And so all of that is actors. I mean, your buyers are actors, and your homes are for sale actors and all of that. So it's to be a part of this to understand how it works. And
crazy.
So it was absolutely is. And on TV, you can say, well, buying $10 million home and a $5 million home, and we've done a lot of like really high-end homes. That's not the reality for most of our buyers. I mean, nobody's buying $5-10 million homes on the bridal path, but it's it's a majority of the clients, if you've given the top number and say, here's what you qualify for, I qualify for this, usually that is the number. So quite often maybe, we're looking, is it a house versus a condo? Do you have a condo fee? But quite often, and we've seen where family members come and say, I want this house, so the parents or whatnot will co-sign or give a higher down payments or things like that. So,
not my parents, but just kidding.
Yeah. I mean, I don't have my parents here in Canada too, so that's not an option for myself.
No,
also.
Just joking.
I know. So, but most of the time when we tell you something, we do tell you. Now, having said that, we have done many, many exceptions for our clients. So this is why I say it's such an individual approach, that if somebody comes to us and say, this is what you qualify, or this is, what I'm looking for, very often we're able to make exceptions for clients. Not always. I'm not going to say that every single time we can.
A wee little exception there.
But we could make a little exception here and there. I would definitely say that we've been able to work with, with our banks or our lenders and position, our clients and get them higher pre-approvals as they're looking for. So,
so somebody really falls in love. Somebody really falls in love with a property and they're like, I gotta have it. I know you told me only 500, Sarah, but we really love this property.
Yeah.
Well, let's see what we can do. Talk to Sarah, basically.
Yeah, exactly. Because quite often maybe we can do something about it. I mean, I cannot say every time, but quite often we may be able to do something, obviously our magic accommodate. I've seen lenders do a lot of exceptions that is part of it may be because we have such a big volume of mortgages we're putting through. So it is the connections, more or less. And how do you know the client? And sometimes we know the client and we say, we work with them and we look through their financials, maybe business owners or whatnot. But we have seen, exceptions made, and
Okay.
we've seen that's been the case as well. So having said that, it's all individual. We will look into it from, client to client and see what we can do and how we can accommodate it.
Got it. I mean, I don't know if you want to say anything about, again, wants versus needs, right? So some things are a must because you have so many kids and you don't want to have 4 children in one bedroom.
Correct. Yeah, probably want to have 4 children in one bedroom. That makes it a little bit harder. Maybe in 2 with bunk beds. I don't know. I couldn't assure. I don't have 4 kids, but at the end of the day, I think that, if, I get it. If you have a family, you have to have a bigger home. And that's why people are buying outside of Toronto. I mean, I have so many clients or buy on the outskirts of Toronto, right? So they may not be buying in, it truly depends. Truly depends. But it is probably a great time to be looking at homes right now. That's for sure.
Awesome. Okay, let's see what else here. Okay.
So more or less condo or a house. I mean, I personally do live in a condo myself. I own a condo and I've done it for many years and I enjoy it. Now it makes it a little bit easier for me. I don't have 4 kids. So, it's probably more individual lifestyle. I prefer to be, fairly active, being, my style suits me, biking, walking, hiking, whatever else. So it gives me, and I travel a lot. So the condos seem to be pretty, easy. I don't even have pets because of that, because of my lifestyle. Now, for a lot of people, home makes sense. I mean, majority of Canadians wanted to be in a home, and predominantly because we have children. And so that's makes it easy. You have 2, 3 kids, you definitely need a home. So that probably changes a lot. Again, the affordability, we were discussing that, your down payment, you're hitting condo fees, maintenance, repairs, renovations, property taxes. So all of that stuff we do take into account when we look into individual options for clients.
So Sarah, thank you for that. Actually, one question came to mind. Obviously, in terms of qualifying for the mortgage, we look at all the different, or rather, the mortgage broker like yourself would look into all the different costs that come with home ownership. So it's not just the mortgage payment itself, but as you mentioned, when it comes to a condo, you've got condo fees. So I guess the question that some people may have is that, well, okay, I understand that condo fees are a set amount when it comes to the condo, but realistically, if I buy a home, I'm also going to have some maintenance costs. Now, is that something that lenders look at all? Like, oh, well, I know as investors, we keep that in mind, but do lenders keep that in mind?
For sure. I mean, definitely, absolutely. You definitely have to look into the condo fee. I mean, you cannot go without it, and we put it into our calculations, just like property taxes, both homes and condos.
Yeah.
I mean, all of that has to be taken into account. I said, I do live in a condo and I pay a condo fee myself.
Yeah.
So, but it does take care of everything. So I don't have grass cutting and shoveling on my snow and everything else.
No, I'm aware of that. So my question was whether, obviously when it comes to the maintenance fees for a home, they're not as cut and dry, and you may have some flexibility about them, but do lenders even take that into account?
Correct. Yeah. So, your house expenses, right? So, you're hitting your maintenance, repairs, your roof, your renovations, all that stuff, property taxes, both condo and the home.
Yeah.
You definitely have to take all of that into account when you're buying a home. I mean, I've seen people who absorb all their down payment, they don't have money to buy furniture too. Right. So I've seen that happening as well. So, I mean, it's interesting.
Just rent furniture, guys. Just kidding. I mean, there are companies out there that will rent furniture. I know that.
Yeah, I mean, all kinds of things. I mean, when you're a first time buyer, you go through, various options, and it truly comes down to it really what suits your needs. And I think that a lot of people keeping up with the Joneses, I say that it's like my brother has this, or my sister has this, or my neighbor has this, right? And you see, like, these days I was saying a joke about hot tubs. Everybody's putting the hot tubs, everybody's at home, so like you have a neighborhood of everybody saying to me, like, I'm buying a hot tub. So everybody's got hot tubs.
Wow.
The pools, became another one that people are installing the pools in their homes. So we do a lot of refinancing where people take in equity to install the pools in their homes. So I would say overall it has been interesting, but I think it's whatever makes you happy, right? Like, it also is what makes you happy, what are you comfortable with, and lifestyle you wanted to live. That's what it really comes down to.
I got it. Now, when it comes to actually qualifying for a mortgage, I know that some lenders, and maybe you can speak more about this, but a lot of times people say, well, maybe if I buy a home and I have a basement suite in the home that I can rent out. And then again, I realize that's an individual choice. Some people don't
Yeah.
even want to have tenants in the basement. But let's say somebody is comfortable with that thought that, you know, they're going to have a separate basement suite that they're going to rent out for a certain amount, and that can help them, first of all, pay for the mortgage.
Mhm.
But I also know that rental income could potentially be used to actually help you qualify for potentially a larger mortgage. Can you
Yeah.
speak a little bit about that, Sarah, and how that all works?
For sure, I can definitely speak about that. So you can, it would definitely help you. It has to be a legally zoned basement, and then
Okay.
depending on the lenders, they might take 50% of it. It truly is very individual, lender per lender, bank per bank, so to speak. But I would say also that it has to be a legally zoned basement in most cases, and it does
Okay.
help. And obviously, I've seen people who have a basement suite and they have tenants in there, and if you're, a couple with children, you can, generate extra income from it. It would help you pay your mortgage, pay down expenses, pay down your mortgage in general, right? Help you qualify with your mortgage. So it is possible to get, but one of the key things to, if you wanted to help you qualify, is to ensure that it is a legally zoned basement.
So in other words, what you're going to be shopping for is what's called a duplex, correct, Sarah?
It's not a
Or
duplex. So a duplex is
not
something a little
necessarily?
duplex, the tribe is something a little bit different.
Okay.
It's just like it's a basement. It usually is a basement, apartment, and it doesn't have to be a duplex. It could be literally just a separate entrance and fire marshal approved. That
Okay.
it's safety and everything else. But it is actually it is a legal basement. It
Legal
has to be
basement
approved by a
suite.
fire marshal. Yeah,
So
separate
that's
entrance, everything
something
else in case of fire.
that the municipality would recognize as
Correct.
a legally zoned basement suite.
Correct.
So in other words, if you are considering this strategy or thinking that, okay, if I'm planning on using some of the income coming in from the basement suite to qualify for the mortgage, then you want to be speaking to your realtor. That's
Yeah.
where you want to involve your realtor to shop particularly for these types of properties that have that legally zoned basement suite. Because if it's not a legal basement suite, then is it a complete no-no? Like, are there no lenders that would consider taking in some of that income for mortgage qualification purposes? Yeah,
Yeah.
illegal. Are there any lenders at all that would say, oh, we don't care if it's legal, we'll take the income anyway? Like,
Again, I would say there are some exceptions. So I would say that we will take a look individually per client, their financials overall, as well as the property itself. There are some exceptions. So yes,
okay,
question is yes and no. It depends on the property, depends on the situation overall. It depends, we
okay,
can place it with that particular lender. There are some lenders who might do that, but not every lender. So majority of lenders will not.
okay,
Um, I would definitely say that if that is your intention, we have a conversation with you about it and see if you can fit with that particular lender and their program and everything else. But yeah, there are exceptions that can be made. I mean, it's everything. There is exception to everything, to be honest.
okay.
So quite often I tell people that, we could take a look in that and see what's available. There are many basement suites, many, many, many. They're just not legal. So,
That's right.
it's in
That's right.
Toronto, Mississauga, or surrounding cities. People have, I have clients who have, rental units, but quite often they're just not fire marshal approved. So they're not considered to be legally zoned basements.
That's
That's what
right.
it is.
Got it.
But they do exist, and people still generating income.
Yeah.
Toronto is such a densely populated city. There is high demand for, places to live. So
Affordable housing, what we call.
that would be correct. Yeah.
So in other words, once you qualify for the mortgage, even if you do happen to have a home that has a basement suite, even if it's not legally recognized, I mean, there are some risks you're taking with that, and that's something perhaps to be discussed later. Like, for your own safety, you may want to make sure that your basement suite is legally zoned as a legal basement suite. Again, fire marshal approved, as you said, Sarah, just for your own peace of mind, because you don't want, God forbid, there to be any sort of situation that could jeopardize the lives of your tenants, put you at risk liability wise, right? So again, that's maybe a conversation for later. But in other words, to qualify for the mortgage, ideally you want to look for a legally zoned basement suite.
That'd be correct.
Okay. And now, if you do buy a house that doesn't have a legal, if you're able to qualify for the full mortgage on your own without the help of the basement suite, with the idea that maybe you're going to legalize it later, okay, that's another option. But that means you're not counting on that income in order to qualify for the mortgage. If you can qualify for the entire amount of mortgage on your own without any help, then maybe that's not going to be necessarily a factor for you.
Yeah, absolutely.
Okay. But I mean, that is one point of difference between a condo and a house, to the extent that you and perhaps your partner are comfortable having tenants, that's an option. Whereas in a condo, it may be harder to, I mean, some people may be comfortable renting out a room in a condo. Most people, maybe not,
Yeah,
especially
of
if you're,
course. Yeah, I mean, if you're in the house, if you're renting, rooms in the house, and there are quite a bit of around the universities like York University, McMaster University. We've done a lot of those. UFT. I mean, people buy homes and they would just turn them into rooming homes, right? So,
wow,
and all the students live in there. That's another way of generating revenue and generating income.
right. The
Um,
lenders are not going to take that kind of income into account for the most part,
Absolutely
correct?
not. So you
No.
definitely want to be very clear on the rooming income. I mean, they usually don't take that. It's very hard to finance those as well. When you
Yeah.
see the rooming house, quite often it's maybe a B lender, alternative lender. It's a private lender. So those are much more challenging to finance with regular lenders. I mean, most people want to finance homes. They
Yeah.
don't want to finance, rooming homes. So where your every room is rented out to students or whatnot. So absolutely.
No, I understand. Okay, we spoke about some of the area resale value again. Okay.
Yeah, supply and demand, I can just touch on that. I mean, as I
Sure.
said, supply and demand, you can see right now, it's comes down to right now it's a great time to be buying because you have a lot more maybe supply, a little bit less of a demand because of the situation on the market. So again, it's probably one of the best times to be looking into the real estate since 2008. So if somebody has not bought a property and they were considering that, and I have a number of clients who are pre-approved right now and really started the process. So probably one of the best times to be doing this. I don't know when the next time is going to come. I'm sure it does. It seems like every 10 or 12 years or so, we seems to be having something. So, but you're going to have to wait maybe 10 years after this, right?
Yeah, yeah.
Depending where we're at and what happens, whatnot. So, yeah.
Got it. And did you want to talk at all about, it says here, how much of the same type of housing is in your area? Too much will cause extra supply. I see. So,
It's more or less what I touched base. Exactly. So I wouldn't worry about that as much. I'm kind of doing high sort of level versus going into every single one of them in detail.
sure. Okay. Do you want to
And
say a few words about this?
it's more or less about buying condos. I mean, I think we touched up based on that. So, and I think that's, just the condominium says certain things included. I live in a condo set and pretty much everything's taken care of. I close the door and off I go. I don't have to worry about anything. I can travel. I can go away for 6 months if I wanted to. And so it makes it a lot more convenient. I don't have any pets as well. So that makes it a lot easier for me to travel. That's why I kind of live in a condo. But it's condos. I mean, most of the condos you have everything taken care of for you. I mean, my condo I have a pool and I have squash courts and all that
amazing.
stuff.
Yeah.
So it does create a lifestyle that I really wanted, and that's sort of what it comes down to. And as you said, we mentioned 4 kids. I don't have 4 kids, so sometimes when you have 4 kids, and
she only has one handsome and smart boy.
Thank you. You too, my love. Anthony is beautiful.
Thank you. Okay, I don't know if you want to get into this a little bit.
Yeah, so I would say GDS.
Yes,
yeah, I'm just going to basically just kind of touch on. I mean, we go by gross debt service ratio, which is I'm not going to get into. I'm not going to explain it to people. I mean, most of the time it's affordability. That's what it comes down to. That's what the gross debt service ratio mean. It's how much debt you have versus how much you can afford. It comes down to your income. It comes down to your debts. Do you have a car payment? Do you have any credit card payments? All of that stuff is taken into account. We calculate all of that, and then we figure out, what is your GDS, and the same thing TDS. So there is another slide which is about TDS.
What does the A and the B stand for, Sarah, if I may ask? I see here you added that up. It's the A, and then the B number. May I ask what that is all about?
Yeah, no, this is just the calculations. You look into it and you say, here is, you look into the numbers, and then you calculate it all. So it's a formula, basically. It's a formula that,
okay.
I won't be going into the formula itself.
Okay, the 32% is kind of, okay.
GDS and TDS, like they call it at 32%, but there are also exceptions on that too. I've seen some of the exceptions, especially if you're putting 20% down. So if the client is it's not a CMHC insured mortgage, and I will get into it a little bit because CMHC made some changes. So Genworth and Canada Guarantee have not. So it is actually interesting right now going through the buying process. But again, all of that can be, if you don't have Genworth, CMHC, CG, so if you're not going through a high ratio mortgage, meaning you are putting 20% down or more, quite often you can add higher. So that's why I won't even mention the number, because it's, again, all of it is individual. All of it is individual, because we might not take it through CMHC when you put in 5 or 10 or 15% down. We might take it to Genworth or Canada Guarantee. So
because they're more generous with those ratios potentially, or
that is correct. They could be a lot more generous when you're not going through a CMHC. That would be correct. Yes.
I see. So when a person is putting, so is the minimum, okay, so
the minimum is
yes.
5% down. So in Canada today, you can buy a property with minimum of 5% down. So if you're buying $1 million home, it's a $50,000 down payment. Now, if you're buying, technically speaking, a property of that, it's a scale, it's sliding scale, so it's not correct. So if you're buying with $500,000, you know, you're putting $25,000 down. That's where you're at 5%. Right now.
That's 5%.
5%.
Yeah.
And there is a sliding scale. And then if you put in $1 million and over, you have to put 20% regardless. And then there's sliding scale about that as well. So then it's, you know, and as I said, it is very individual. So
I remember though, like a few years ago, they came up with that restriction. I don't know if that's still in place, whereby if you purchase a property that's over 500,000, for the first 500,000, you got to put at least 5% down. But then if it's for any amount beyond 500, you got to put 10% minimum. Is that still the case?
Exactly. There is a sliding scale, and then afterwards it goes into 20% after $1 million. So after all,
I see. So okay. And what was because I think they just announced some changes to the to this. I don't know if you're gonna get into it into later slides, but it seems to me that there were some changes recently announced that they want to make it even harder.
That's right. And only CMHC. So that's what I also want to say, that for people, only there are 3 insurers here in Canada. So we have CMHC, Genworth, and CG Canada Guarantee.
So hold on, before you go into what an insurer is, okay, so you know what, I'm going to bypass this slides because again, you're just kind of explaining the calculation. This is a very detailed presentation.
Calculation, all the formulas, which is, you know.
Okay, that's something that you can take your clients through. And again, we're going to, before we get into that slide though, so again, as a first-time home buyer, or not even as, if you're a first-time home buyer, you can get in with 5% down, or is it, even if you're not a first-time home buyer, but if it's owner-occupied property, you could potentially
buy 5% down. Yeah, of course. If it's not, if it's owner-occupied, if you have a property and you're looking to rent it out and you want to buy another property as an owner-occupied property, you can still buy it with 5% down. Correct. That is still an option.
So hold on. But if it's a rental, so let's say if you already have your
20% down, it's all.
Then you need at least 20%
down, correct?
Yeah,
so if you say I'm buying a rental, now if you say I own a property, let's say you own a condo, then you say I would like to buy a detached home, you can buy it with 5% down. Now if you say I own a condo and I'm going to buy another condo that's going to be a rental, then you have to buy it with 20% down.
Okay.
So as soon as you pay the rental, then it's 20% down. If it's a primary residence, you can buy it with 5% down.
Got it. So would most lenders accept that somebody has, as you mentioned, you know what, I have a condo, but I want to buy a home, and then would you say that, you know, I'm splitting my time between the two, or like, do you have to, so will they allow you to have a secondary residence that is just
yeah, there is a secondary residence. Usually the secondary residence is considered to be more the cottages. So, you know, if you want to buy a cottage in Muskoka, that's considered to be a secondary residence.
Okay.
You want to buy Blue Mountain, that's a secondary residence, a Whistler, or, you know, Mount Tremblant, or not. Those are all secondary residences quite often.
And those would also qualify for the preferred, like you can put down 5% only?
There are there are certain rules on that as well. And again, it's individual how we position that, and we will look into the overall picture. Sometimes the secondary homes can be, let's say you have a son or daughter and they want to go to university, let's say go to Waterloo, for instance, and you want to buy them a condo, that's also considered to be a secondary home. So there are ways of doing that. And I won't get into it right now because it is individual. Okay. And every lender has a little bit of a different way they look at them also. Okay. And so I would just say that it's, you know, we could look in different things and how we position the strategies we use to make that work for our clients.
For sure. Well, and also, Sarah, I mean, I want to kind of come back to the fact that today's webinar is about buying your first property. So for somebody who's literally just buying their first property, good to know that you can still get in with 5% down. Now, those mortgages that are bought with, you know, less than 20% down, those are, explain it to us. They have to be insured, right?
Be insured, they'll be correct. They have to be insured through CMHC, Genworth, or Canada Guarantee.
So we have 3 companies in Canada that are willing to insure these, what are called higher risk or high ratio mortgages.
High ratio mortgages. Yeah, so they're not high risk, but they are high ratio mortgages.
High ratio, sorry, different term. So you get in with less than 20%, you're considered, you have a high ratio mortgage, and you have to pay an insurance company, one of these 3. So CMHC, Genworth, and what was the last one?
Canada Guarantee.
Canada Guarantee. You have 3 choices. And so how it works is you have to pay a premium to these companies for the benefit of them insuring your mortgage. If you don't want to pay that premium, then the idea would be that you have to come up with a lot more dinero. You have to come up with the full 20%
Correct.
to bypass that requirement. Okay.
That would be correct. Yes, that'd be correct. You'd have to pay higher. And as I said, CMHC is making some changes. So I won't get into it why, because Canada Guarantee and Genworth have not made those changes. They've decided to continue supporting the Canadian homeowners without the changes, not making it more difficult like CMHC has done. So therefore, I won't give the credit to CMHC right now, and I will not talk about their changes, because I think we can go to Genworth and Canada Guarantee.
Okay.
And we can support them, actually. As they supporting the Canadians, I think we can support the companies that are supporting us. We can support them in return. So I would say we keep it unchanged right now, right?
But it sounds to me, Sarah, that the belt is beginning to tighten. So to the extent that people want to make a move, this would be a good time while we still have those other options.
That is exactly. I definitely recommend that. I mean, I don't know what's going to happen tomorrow. They could come up with new changes. And Canada Guarantee and Genworth can also follow CMHC.
Yeah.
So, that could happen tomorrow. We don't know. But I definitely recommend if somebody's looking to buy, it's definitely not getting easier to buy. It's getting harder. So qualifications for mortgages are becoming harder and harder.
And that's been the trend for a while. That has been the trend, I would say, for the past year and a half, 2 years. I mean, because there was that attempt to cool off the market. So they came up with a foreign buyer tax. And I mean, all these, they've just made it harder and harder. Now there is, and again, I don't know if you're going to be getting into it. These are, some of the, sorry, before I go into that, one last question though, because this is something I'm personally curious about. And you said there's not a lot of clarity, but I know even for first-time home buyers to help us because of, especially in cities like Toronto, how high the real estate prices have become.
Correct.
The government has even said that we're gonna potentially partner with you to help you. Now, is that to help towards that 5%, or is it?
Correct. Yeah, that's to help. So the government has partnered up to help the clients with the down payments, and there is a program for clients to be able to do that. Now, the challenges with that is that most of the people in the cities like Toronto and Vancouver do not qualify for a program because their properties are so highly priced.
I see. So it's for properties below a certain purchase price?
That's exactly what it is. And so
what price are we talking about? Do you have that figure like off the top of your head?
Yeah, to be honest with you, it's sort of been interesting because we have tried to do this for a few clients and we've learned that in Toronto, it does not work as well. So therefore, I'm not going to even comment on that.
No worries. That's okay.
I would just say that I would prefer not to. If somebody's looking to do that and they're buying outside, then we probably can look into those programs.
Okay.
But I would say that the buyers in Toronto and Vancouver markets are probably not going to qualify for something like, because there's no properties you can buy for those prices, right?
I understand. So whatever the price is, it's not a reflection at all of the GTA market. So, and I would say most of the clientele has been here, and so that, I understand. Okay, but I mean, it's good to know that there may be that option there for people that are looking to buy pretty much outside the GTA.
Of course, if they're looking to buy outside there, this could be an option for them to get into it. And there are terms that we can go through and conditions.
Okay.
I'm not going to do it on the call, but
no worries.
If somebody wants to do that, they can reach out and talk to us, and we would help them out for sure on this.
Okay, Sarah, fantastic. So again, just moving on to the next little slide here. These are some of the other costs that are factored in.
So we're talking about, so a big one, if you're buying a property, like a brand new from a builder, it's GST. Most people are not aware of it. No matter if you're buying as a primary residence or if you're buying it as a rental, you have to look into all of that. The GST has to come into place. You may not necessarily need to pay it, depending on the purchase of the property again. You have mortgage insurance. So we were talking about high ratio mortgages, CMHC, Genworth, OCG. You have appraisal fees. You have lawyer fees. You have land transfer taxes. If you are in Toronto, it's double. You have a property insurance. You have moving costs.
It's crazy how expensive they are in Toronto. I know.
Toronto's quite expensive. Land transfer taxes can be paid double. You have condo fees if you buy in a condo. You have home inspection fee. You have.
Now, do you help people? Do you help people estimate all these different fees, Sarah? Is that part of your service as well?
We do look into that, exactly. We do into that, and like property taxes. Then you also have life insurance, right? So all of that stuff is,
which, by the way, guys, it's small.
It's very, very crucial. So it is actually small compared to all the other costs, but there are all these other costs that are involved when you're buying a property, and most people, not aware of. So they always say to me, "How much do I qualify? What is my monthly payment? Is it $3,000?
Right.
Is it $5,000?" And then they realize there is all this other stuff that is involved. So we kind of try to educate the clients and say, here is some of the things you should be aware of. And that's why it's good for first-time buyers to truly, once you've gone through the process once or twice, you know, but the first time you probably want to be aware of all the fees. And there is a difference between a condo and a house as well.
For sure. Now, are they still, is the CRA still doing the whole GST rebate if you're going to live? So again, the GST only applies for new construction. So that doesn't matter if it's a condo or it could be a new townhouse, but if it's brand new construction, that's when the GST applies. If it's a resale, you don't have to worry about it. Correct, Sarah? As far as
you... Correct. So it's only on new pre-construction, brand new from the builder, the GST applies. If it is buying with a real estate agent, the resale second time around, that does not apply.
Nothing to worry about. Okay, so that's something else very important to keep in mind, because that GST 13%. Now, Sarah's saying that you may not have to pay it. So if you're going to live in the property and you declare that you're going to live there,
there are two caveats, and I've owned a number of properties myself, so I had rental properties for years. You buy, in a primary residence, you quite often can get that rebate back, and so there are ways of doing this, and your accountant and your lawyer are best to advise you on that, and they'll fill up the forms to the government to do that. If you are looking to buy a rental property, you can still get that back, depending on, may not the entire amount, maybe a portion of the GST, but you have to have a long-term tenant. So you have to have a lease that you can submit also, by your accountant or by your lawyer.
No Airbnb, guys.
No Airbnb. Unfortunately, if you look into Airbnbs, and we have quite a bit of those in Toronto, we have, properties that are allowing them with their status certificates to, have Airbnbs. I mean, people are making great income, from doing that. It is also all out there, and you have to be aware. But yeah, if you get a GST rebate, unfortunately, it cannot be a short-term rental. It has to be a year or about a long-term rental. You need to have provide a lease for.
Well, it's really good to know, Sarah, for people that are exploring that option as well. I know, again, this is a first-time home buyers webinar, but I mean, that's good to know.
So yeah, a lot of investors. We have so many clients who own multiple properties. That's really our specialty. I mean, we will definitely help a first-time buyer. Sure. That's fairly easy process, but it is more, more of a, okay, I'm ready to buy my first property. It's more, challenging.
It's easy for you, Sarah. It's easy for you.
Yes,
However, I remember when I first took that step, how scary it was, and it can feel very overwhelming when you're buying your first property, and even your second one. Like, I mean, the first property buy is probably the scariest, because you're just all these questions on your mind. And again, working with a professional like yourself, the more you know about it, the less scary it is. And again, taking into account all the different costs that are part of the of the process of the purchase. And it's not just the mortgage premium. It's not just the mortgage amount. And it used to be the rule, Sarah, that you got to take about 1% of the purchase price for closing costs. Is that still a realistic estimate? Would you say?
Lawyer will tell you. The lawyer will tell you that's approximately what you kind of look into it. Now it depends. If you're in Toronto, that's a little bit higher, right? So because we have double Toronto tax.
Land transfer tax.
The land transfer tax, correct. And I mean, if you're a first-time buyer, there is also a rebate that comes from the government. It's like $2,000, and the lawyer best to advise. I'm not a lawyer, so I'm going to give you a really good advice on that as well. Okay. But you can get, as a first-time buyer, you can actually get a rebate.
On the land transfer tax.
That would be correct, yes. So
well, that's good to know that they're finally...
And then they've been doing this for a while, so a lot of people are not aware of it. But if you have a good lawyer, I mean, I think every lawyer that does real estate should be aware of it. No exceptions. Like 100% of the lawyers in real estate should be aware of the rebates.
Yeah. And that's just in Toronto, or is that in, like, let's say Mississauga, for example, or is that
anywhere? If you're a first-time buyer, you actually have ability to get that done. So
hey, I never got that back when I bought my first property, but I don't know how soon this was introduced, because this would have been for me like a number of years ago.
I mean, I don't know when it was, but it has been in existence for quite some time. I know that I actually got it myself. So when I bought my first property in Canada, I ended up getting it myself, and I was buying all my properties. I mean, I bought in Burlington. I had rentals all over the place. Yeah. But my first property I bought was in Toronto, and I did get a rebate as a first-time buyer. So, it has worked out well. At the end of the day, government money, no matter,
of course,
no matter what amount it helps, If it's $2,000, $5,000, or $10,000. So, but just be aware of that.
So we already spoke about, we already covered some of this. Okay, yeah, thanks, Sarah. I'm just aware that we're getting close to the 5 p.m. Time, so I don't want to keep this super long.
I think that's what I mentioned. As far as working with a real estate agent is key. Having a great lawyer key, because you get in GST and land transfer rebates, and accountant the same thing.
I know. I'm thinking.
I mean, and you didn't know about real rebates, so I didn't know. Recommend the lawyer that I work with. you know, a number of
Sure.
lawyers. So we have a number of
Yeah.
lawyers in Saga, Toronto, and different places that we'd recommend. And the same thing, you know, I said, working with the mortgage professional, we shop for you. It doesn't cost you anything. We do one credit check, and you know, we get you the best rates, but also terms is key. I mean, I've seen so many people going through separations, a death in the family, different things, children going to school. So change in unforeseeable changes that people think never happen, they do tend to happen. You know, we're speaking about having the right team, like home inspector as well is key. So especially if you're buying a house, you wanted to make sure, okay, you know, my furnaces and all the other
Yeah.
things, you know, my roof, how old is it, when do I need to
Windows.
redo it? All those things that, you know, kind of, I don't have a home, so you know, I have a little bit of an easier time with all of this. And then, you know, we said about, you know, your home insurance is also very important, just like your life insurance is very important. So getting those
Yeah.
two is key.
I have a great person for that, guys.
You are a great person
You know,
for
when
that.
the time comes.
Yeah.
And that's part of the requirement actually for the lender to grant the mortgage. You need to have the home insurance
You
already.
doing your home insurance, it's mandatory. So getting your home insurance is mandatory, getting your binder, it has to be sent to the lawyer. You cannot buy without it. And, you know, usually, you know, you're able to obtain it from insurance company. They forward it directly to the lawyer, and
Yeah.
it is mandatory. You cannot close a property in Canada without home insurance. I
And
actually
here
think
too. And
that's
here too, guys.
yeah, and I would say that life insurance should be as mandatory. You know, like I think that if
Yeah.
your life is most important. I think that, you know,
Yeah.
if you are a primary earner in the family or not, if you are somebody who's looking after the kids, like people say to me, well, my husband is primary earner, I'm looking after the kids, and I say, what happens when you're not able to look after the kids? Something happens to you, and then
Yeah.
would your husband be able to still pay all the expenses and then also hire somebody to, because you'd have to pay for the services like a nanny or, you know, maybe
Absolutely.
schooling or different things that the wife was able, you know, to replace when she was at home. So there are
Yeah.
truly two ways of looking at it. I think that, you know, I know that I personally have life insurance, and I'm a big proponent of that as well. Anything
Thanks, Sarah.
happens, but again, it's individual. Me personally, I highly recommend it, and I think you are incredible at positioning that and
Thank you.
doing all of that for the clients.
Thank you. We, again, that's one step that we may not get into here, but I mean, there are also differences. Like oftentimes the lender will offer some version of a life insurance that's linked to the
That's
mortgage.
insurance. Yeah, that's mortgage insurance. And, you know,
Mortgage
the law
insurance.
will have to offer this, and you can accept it or decline it.
Yeah.
I always say that your life insurance is better than mortgage insurance.
Yeah.
I am not like, I'm going to
again,
say that it allows you to, you know, if anything happens, you know, with
Yeah.
mortgage insurance, you only getting covered the balance of the mortgage. With life insurance, you know, it's whatever
you
think
decide
you
how
need,
much
you decide that
you want to insure yourself for, because you know the mortgage could be, obviously it's an important consideration. You just bought a $500,000, $700,000 home, whatever the mortgage amount is. So in addition to that, if you have young children, so as an insurance broker, that's something that I look at. We take all of that into account, because yeah, it's great that your mortgage is getting paid off. What about putting food on the table for the
You
kids?
have to keep in mind that on the mortgage side, your insurance could often decline. So if you pay down your mortgage in 20 years, you'll have almost no mortgage left.
Correct.
They will only get with mortgage what the balance of the mortgage is, which with life insurance, you know, if you applied for $2-3 million or whatever it is, you will get that amount of money. It's not declining. So quite often, you know,
It's not attached to, it's not linked to exactly what the mortgage amount is. You know,
Another
that's
equity, you
something.
know, sorry to interrupt you, but this came to my mind. I've actually, I'm really big about insurance because I've had a number of clients who got ill,
Oh.
cancer and things like that, and their mortgage insurance was tied to their home with a particular bank. I won't mention the bank at the moment. And the challenge with that is also that if you get ill and let's say you're now no longer employed and you want to get equity out of your home. So I have clients who have no mortgages, but now they got ill and they're like, Sarah, I would love to access my equity in the home. And the challenge with that is that, you know, if you look into, let's say, well, maybe not an example, but they have lower mortgages. So I have a lady who had a very low mortgage. She was in her 60s. She had life insurance and she wanted to access the equity of the home, but the particular bank was not willing to do it because she was on disability. She had cancer. So we had to go to another lender and she lost her insurance. Like, I mean, it was such a big
because she didn't have her own policy. She had a policy that was attached to the original mortgage with that lender. Yeah. Whereas, no, absolutely. Whereas when you have your own policy,
well enough, yeah,
which you acquire when you're healthy, then you can take that with you regardless of where your mortgage is, you know, because you may decide for whatever reason you want to switch to a different lender in the future, maybe due to a refinancing, you want to access some equity. You don't, absolutely. And you know what, this is a separate presentation. I could do it. It takes me about 10 minutes.
Yeah, so it's very important. Yeah, so just to keep that in mind, that you don't want to actually have your mortgage insurance tied with your mortgage.
Attached to your mortgage, which is an option.
You want to keep it independent. Another one that I also wanted to mention before we get off this call for your audience is fixed rate mortgages with the banks. There is an IRD interest rate differential. Again, it's a formula. I won't get into it, but the challenge with that is that the banks calculate it a little bit different than the monoline lenders. So monoline lender meaning that they will, like First National, AMCAP of this world, they only specialize in mortgages. It is lower than the banks. The bank fixed rate tend to be higher. Not always, but there are many cases again. And so I just want buyers to be aware of that we do let them know that if you go to a bank and you get, a fixed rate mortgage, that should you wanted to break this because let's say you had a divorce, you had
whatever reason
in the family, you had, somebody got to go to university, you need to access your equity, whatever it is, you just be aware that your penalty will be higher, most likely, not always, but most likely than with the monoline lender. So that's something that I actually wanted to mention because that's a big one. It comes out quite often. Somebody's like, oh my God, Sarah, I'm paying $20,000. What am I paying this money for? And I'd be like, well, you've gone to a bank, you've got a fixed rate mortgage on your own. Nobody advised you. And if you walk into TD or Scotia or any five banks, they won't tell you, well, if you come to us and if you go to monoline, our penalty is going to be bigger. So I'm like, it just doesn't work like that, right?
No, and in fact, they want to make it hard for you to leave, right? So
correct. Yeah.
I mean, that might, that will give somebody pause. You're telling me that in order to get out of this mortgage, I got to pay $20,000. That would give a lot of people pause. But then if you're stuck and you have no other option, this is where.
And also it's a formula, right? So it's based on your bond rates and the bond rates fluctuate. And so it depends, like today.
You have no control. You have no control over it.
It could be 5 and afterwards could be 15. It's all over the place. But overall, if you were to compare a monoline to, major 5 banks, then you find that the major 5 banks usually will come at a much higher penalty than the monolines when it comes to fixed rate mortgages. When it comes to variable rate mortgages, it's identical. It's a variable closed. What I say, people say is a variable open. It's very different. Variable open, it's variable closed. That's what most people get. And that mortgage it has a 3 months interest penalty. So it's not the full number of that you pay monthly because there is a interest and there is a principal. So principal, they don't care about you putting it back into your pocket. The interest, they'll calculate it, multiply by 3. That's your usual, and that's overall very identical from monoline to a major bank.
For the variable rate mortgages.
That would be correct. If you are looking into a fixed rate, you have to be aware. That's buyer be aware is the IRD. It's I've got a lot of clients who got burned on that, like a lot over the years. Nobody wants to pay $20,000. They're like, what is it? What am I paying? Why am I giving this to my bank? And I'll be like, this is what happened. This is what $20,000. They're like, it's a freaking, I can send my child to get an education.
Of course.
Buy a car or depending whatnot. So different things.
So I wanted to actually mention one last thing because I know we talk about home and fire insurance and the fact that the home insurance is a pre-requirement for you to be able to even buy the home. Here too, I would highly recommend, guys, that you speak to an insurance broker, somebody that has access to more than just one company. This is where my own parents, and they don't listen to me because they're my parents, maybe at some point they will, but they initially, so many years ago, when they bought their home, they just called TD, and they took whatever rate was offered to them. Years later, they found out that they could have been paying half as much. I mean, they were paying, I was shocked to hear that they have like an average size home, nothing fancy. They were paying, $220 a month. And I was, how come you guys are paying so much for home insurance? And then they don't even, and now finally they decided to call a broker and they got quoted like less than $100 a month. So guys, don't just call the banks and just know that, and again, I myself, I work with I'm not licensed for home insurance myself, home and auto, but I do work with a fellow professional that is licensed in that area and he has access to the entire marketplace. So you want to give yourself options. You want to do your shopping. You want to know that, just calling TD is not necessarily your best option. Okay.
Yeah, of course. Yeah. I mean, Canadians are conditioned to go to the banks. I mean, everybody goes to the banks but there are different options and, that's about it. But I would say that I know we're at about 5. We are, we've gone through a lot of this. I think we're at about 5.
We already went through a lot of this information.
We've gone through pretty much everything on in detail.
Okay, yeah, this is a very detailed, like, I mean, we've already explained a lot of this. Bottom
Covered a
line,
lot.
guys, your mortgage broker is, in my opinion, your first step. I mean, it's great if you have a good realtor that you're friends with and they're willing to help you. They may be willing to introduce you to their mortgage broker contact. Um, I highly recommend Sarah. Obviously, she knows what she's talking about. And I know Rhiannon is her colleague. She was supposed to be on the call with us today. Unfortunately, she had a family situation, unfortunately, not able to attend, but I'm very grateful that Sarah was able to join us. So that's Sarah's contact information. And if you do choose to get in touch, if and when, when you choose to get in touch with Sarah, feel free to mention that you learned about her through Letitia's Money Matters webinar. That way she can, she knows where her people are coming from.
Yeah, Letitia, I really appreciate you having me on this call and
my pleasure.
And sharing all this information. It's a new way of doing business. We're no longer doing the seminars. We're no longer doing this face to face. But I think this is the new way of doing. Zoom is the way to go. And I just want to say thank you again for having me. I really appreciate it.
My pleasure, Sarah. Don't leave yet. I thank you very much, Sarah. Again, don't leave yet. I want to see if anybody has asked any questions on Facebook.
Sure.
And no, thank you for your time. I know we've gone a little bit past the time. Okay, buying here first floor. Let me see if there were any questions. No, I don't see any questions there. If we do get any questions afterwards, I will definitely let you know, Sarah. And by all means, feel free to share. My Zoom webinar should be, the link will be available on Facebook soon. So feel free to share it on your wall as well.
And just feel free to also tag my Facebook page. Like just finish it and we'll share onto our business page, please. So that may be the easiest.
Oh, I don't know how to do that. I will tag you and then please do what you need to know.
That's exactly. Just tag me and I'll share it on our business page.
Because you know what, I've been meaning, it's something I need to get done, which is to create a business page for Maven Wealth, my company name. Hopefully by next week. We're very busy with Canada Day celebrations, as you know. Anyway, Sarah, thank you so much again. And I look forward to seeing you very soon and continuing to stay in touch, both business and as a friend. Okay.
Same here. Thank you so much, sweetie. Have a wonderful evening.
My pleasure. My pleasure. Blessings. Take care. Bye-bye.